at the moment, we're in an environment called stagflation, which means inflation is super high, but growth is low. And your asset allocation in a stagflation mode should not be ideally the same when you're moving into a recession mode or good times or maybe an inflationary mode. So it always should be adapting.
Everybody is talking about the gold rush, right, of AI, and NVIDIA is the one selling the spades, right? And I like companies that sell spades.
Yeah. I have an interesting number that 80% of investors actually do not outperform the market. Right. Or the benchmark, right? So that gives you a clear indication that people are not smarter than the S&P 500. So do not reinvent the wheel. If you want to day trade because it's your hobby or because you know you're able to find some kind of an interesting stocks to pick, that's perfectly fine.
The house always wins, right?
The house always wins.
I want to welcome you to the second season of Couchonomics with Arjun. Join us this season as we go beyond fintech and payments and embark on the journey into the future of financial services, a future which will be shaped by existing and new developments in technology and innovation, including and not limited to the likes of embedded finance, open banking, ESG, various versions of metaverse, decentralized finance, digital currencies, and other trends. On the couch, we're going to have the most influential and progressive-minded founders, executives, investors, regulators, innovators, and industry commentators from across the MENA region and beyond. Join us as we unravel a multitude of layers of the financial services industry and try to learn how technology will continue to impact the world that we live in. Couchonomics with Arjun is proud to collaborate with some of the most respected and innovative names in the world of payments, fintech, and technology. Arjun is a reliable end-to-end payment solution that provides innovation and flexibility to help businesses achieve their ambition faster by turning payments into a strategic growth driver. Get everything you need with 2U, a Saudi-based super app for delivery, mobility, on-demand services, and a lot more. 2U connects you to everything you need to enrich your daily lives by building an ecosystem across its end consumers, merchants, and reps. Visa is a world leader in digital payments with a mission to connect the world through the most innovative, convenient, reliable, and secure payments network to enable individuals, businesses, and economies to thrive. Jidea is a leading fintech and payment solution provider founded in Saudi Arabia, expanding rapidly across the region with established operations in UAE and Egypt. Jidea's vision is to empower merchants with the tools to start, manage, and grow their business. M2P pioneers next-gen fintech through innovative offerings across payments, lending, and banking landscapes. Their comprehensive tech stack powers end-to-end banking services, BNPL, customized credit cards, prepaid cards, and more.
Well, welcome to today's episode of Couchonomics with Arjun. I'm your host, Arjun. 60 episodes later, I'm actually tired of saying I'm your host, Arjun. Joining me today on the couch is someone who runs a robo-advisory business across the MENA region. This business is headquartered in Singapore. They have actually a wide presence already in Southeast Asia, and a couple of years ago, they set up shop in the UAE. I think this is quite an interesting time to actually have this episode for a couple of reasons. Last season, I actually had one of the wealth online trading platforms on the show. Earlier this season, I had someone, or actually a group of founders from a company called Twig, who talked about embedded savings and how embedded savings could be linked with investments and wealth creation. So with that, I'd like to invite Joseph El-Am. He is general manager for the region, which is the MENA region with StashAway. Joseph, welcome to the couch.
Thanks a lot for having me on the couch, Arjun. Happy to be here.
All right. So just, we're going to cover a few things, right? Like I mentioned to me, a key purpose of I guess, Couchonomics is actually to sort of impart a bit of understanding and knowledge to the audience, because we actually do, fortunately, have quite a wide audience, right? So I think let's just start with StashAway, right? I think it'd be very interesting if I just break this down into sort of three parts. One is, what was the genesis of StashAway? So if you could speak on behalf of the founder or founders. The second part of that question would be, talk to us a little bit about, the expansion from Southeast Asia to MENA, and why was MENA chosen as a part of the world? And then finally, just before I give too much away, just tell us where you are now in your journey, and if you could sort of bring to that in life in terms of AUMs or anything like that, that kind of sort of help.
Absolutely. So StashAway, founded by three co-founders, Michele, Nino, and Freddie, all met in Singapore. They used to work in Singapore, and they back in 2016, and they commonly found a gap in the market in Singapore at the time. So to get access to a state-of-the-art investment strategy, a proper diversified portfolio, you either need to be, kind of in the City Gold kind of segment, or maybe a Julius Baer. You have your dedicated wealth advisor, creating those portfolios for you. And there is a huge gap, first of all, between that City Gold and the Julius Baer kind of segment, but also for the mass market. If you would want to have access to some sort of the strategy, you will need to pay a lot of fees and spend also a lot of time perfectioning your asset allocation. So that kind of solution was not present in Southeast Asia at the time, and that's how StashAway was created. So the main business model of StashAway is to provide a state-of-the-art investment strategy to everyone with little or no, barriers of entry, and with minimum fees. So StashAway was created in 2016. Our first expansion was in Southeast Asia, in Malaysia, in Kuala Lumpur in 2018. And then we expanded here in 2020, so in the midst of COVID. And in 2021, we also expanded to Hong Kong and Thailand. So we're now present in 5 different markets. Across our journey, we're able to manage over $1 billion in asset under management across all those 5 markets. We are also a Series D backed entity or funded entity. Our latest round was led by Sequoia Capital. We're also backed by SquarePeg, 8 Roads, and a couple of angel investors in Singapore. So the reason we looked at Middle East or specifically the UAE, as an area of focus or to penetrate this market is when we were looking at the data, we saw that actually there's roughly $700 billion of personal wealth sitting in the region, out of which 70% is booked offshore. So first of all, not present here in the market. Most of it sitting between Switzerland, Luxembourg, Liechtenstein, all these kind of wealthy countries. And also, if you look at this entire pie of 70 billion, 50% sits in cash in the bank. So there is a huge gap in terms of financial literacy, education, but also access. So some people actually don't know, never were exposed to investing and saving for the long-term plan. Most of the investment options in the Middle East were basically savings account or maybe bonds and real estate. As an Arab personally, I've grew up with my parents telling me first thing you should be doing is buying your house, real estate, first investment. And it might not necessarily be true anymore, especially in this age. So that's why we decided to launch in the Middle East. And so far it's been an incredible journey, 3 years that we're operational. Obviously 2022 was kind of a difficult year in the market, and that's how we readapt and learn from it. 2023 also is quite an exceptional year in the market. So far interesting journey. We're looking forward to kind of bringing more StashAway products into the market and obviously expanding within the region.
Okay, so thank you for all that. You guys call yourself robo-advisors, right?
We used to.
Right.
If I want to correct it now, because we launched multiple products and we expanded our suite, now we call ourselves an investment platform, or a digital wealth manager. But most commonly right now, we're an investment platform.
What's the difference, if I may ask?
So an investment platform is literally giving access to the investor multiple ranges or suites of products, right? And with the human touch behind it. Because if I say digital, it means that everything is through the application, which is the case. But when it comes to dealing with clients' money, you always need to have someone on the back trying to help you as a wealth advisor or customer support, and we're there for them. And that's what's available on the platform. So that's why we shifted a bit to call ourselves an investment platform, to bring the attention to the customer that we're here behind you. We're not just digital. Now, with the suites of products, it's not only robo-advisor that we offer anymore. We have a suite of cash products for you to manage your cash, so your short-term savings, or maybe your emergency fund, and we can talk about this in a bit. You have your general investing portfolio, so those are the ones that are curated depending on your risk level, pre-constructed portfolios of ETFs. And then you have finally something we call StashAway Reserve, which is dedicated for accredited investors, giving them access to the private markets through PE or VC or even angel investing. This is only available in Singapore, and obviously thinking of launching it here in the UAE, which we can talk about more.
Okay, so great. So let's go back in time, right? Yeah. And you'll have to educate me, because I am, there are lots of topics in the world of financial services I am comfortable with. Wealth management is not one. I'll be quite honest with you. I guess for two reasons. One, I'm not wealthy. Secondly, I've got a limited sort of brain size to be able to put everything in it. So if I go back in time, about 5-6 years ago, maybe a little bit earlier, we saw this sort of emergence of growth of investment platforms, robo-advisors, whatever you'd like to call, so largely in the West, right? And they created a lot of, to be honest with you, I guess, positive noise about, the fact that they had come and democratized investments, and I'm not talking about the Robin Hoods of the world, but I'm talking more in terms of the wealth fronts and
the betterments
of the world, right? And Betterment was actually a great example, right? Then we started seeing that a number of these companies were sort of being, I guess, we're finding it challenging to sort of, I guess, flourish into more than just wealth management players, because I guess the end game for a number of them was more than just being an investment platform. And I think a number of them actually got acquired by some of the bigger banks, and I think the banks realized that there was an opportunity, as you said correctly, where a completely different segment of a customer could be served, leveraging some of the capabilities that these platforms brought, obviously in addition to some of the existing capabilities these incumbents had. And that's kind of played out, and I guess, the world is evolving as we talk in the West, and I'm not going to go there. This part of the world, at least from my little knowledge, was that I think a lot of people I spoke to when initially the concept of investment platform and wealth and robo-advisory came was two. One was, I think a lot of them felt that although people were signing up to it, they weren't actually funding these accounts, right? And they were not really using these plays. The others were basically saying that actually the awareness of what this was offering was not at its highest. So therefore, if you don't have an informed customer base, it becomes harder and harder. And the third element was that I think in a lot of, especially in the UAE, with a very transient population, right, a lot of us were actually on these platforms, but we were using these platforms from the domiciled countries that we came from, right? So now that's a very long question to ask you, right? So where I'm trying to get to with all of this is, how do you in StashAway manage to overcome some of these challenges, which are, I guess, existent, and succeed here in I guess, the Middle East?
It's a great question, and I think you've touched upon the main challenge of the UAE and the MENA region specifically, maybe the GCC more specifically, is that the region is mostly expats, right? So how do you kind of cater to different cultures with different investment kind of habits that they had back home in one single country? So I'll give you an example. I mentioned that I'm an Arab personally, I'm Lebanese, and also a lot of locals here within the GCC. The first thing that they do or they're exposed to is real estate. So we tend to invest in real estate or maybe fixed deposit. You go a bit to Southeast Asia, maybe in the Philippines, people tend to send money back home. to buy also a piece of land or maybe support their families. Correct me if I'm wrong, but for example, in the Indian community, gold is an asset that is quite interesting or that is quite essential for to buy. In Europe, maybe they send also money back home to fund their pension funds. So how can you literally bring every single nationality, all 197 nationality in a single country, and tell them that what you're doing is okay, but it's not the only thing to do? How about creating a portfolio that is diversified across multiple asset classes, having different allocation towards them, to fund your retirement plan or whatever goal that you have? And this is the main challenge, especially in this part of the world, even in Singapore, because it's quite of a diverse population. And the only and simplest kind of answer that I can give you is financial education and awareness. And what we do at StashAway is a lot of that. So in the application that we have, maybe a lot of people download it and don't use it, but what's available for free on the app without actually funding the account is an in-app academy. So you're able to watch videos about how to start investing, how to start saving, creating a budget, whether it's best for you to buy or rent an apartment. So all these kind of little financial or personal finance topics that you think about but you never actually act on. We also do a lot of financial wellness programs where we go to companies and talk to their employees as part of our CSR initiative. That's completely for free, where we talk also about these kind of subjects and educate them on the best practices of personal finance. And I really wish that other players in the market do the same, especially schools and also parents at home. So I graduated in banking and finance, for example. There's that's the only major that you probably could have talked about investing as a major, right? I've never studied how to start investing. I've never studied how to get a loan or pay off my credit card or whatever personal finance topic that you might think of. So, and this is all a kind of a skill set that you build on your own while working or being included in a certain community. And that's a shame because it's a skill set that everybody needs. It's not like you're studying architecture and you're not going to be able to save. Similar thing for medicine. So it's an essential topic that I really wish schools and universities and even parents at home can teach people early on. And this is, I think, the only way for us to kind of surpass this challenge of financial awareness and education, because by the time someone is 21 or like 22, starting their career, they already know what to do with their savings. Create first your emergency fund and then start investing for the long run. Age is your best friend at the end of the day when it comes to investing with the effects of compound interest. So that's the main challenge.
Age is your best friend. That's just a way to kind of it's a kick below the
it's never too late.
The waist for people my age. No, so I get that, right? So I also believe that you mentioned schools, you mentioned educational institutions, you mentioned the responsibility as parents and so on and so forth. Do you think as an industry, right, you guys all together, whether they are traditional or the new kids on the block as I call it, do you do enough to impart that knowledge? And if not, why don't you guys all corral together to solve for that?
It's a very tough question. But if I want to put myself under this umbrella of all the financial institutions, I would say no, we're not doing a good enough job. And by financial institutions,
I think we all know that, right?
Yeah, yes. Of course, that's the obvious answer, right? But what are financial institutions? So you have the banks, you have us like fintechs, the wealth techs, but also you have all the other companies that provide embedded lending or embedded banking that I think should be doing a better job educating people on the essence of finance, because finance is not only saving and investing, but it's also understanding when or not to take a loan, when or not to take a credit card, or maybe purchase an apartment. So all these buy now pay later applications that are now embedded in most e-commerce platform or furniture stores or whatever, that's great. That's a great solution to have. But what is the education that also those players are doing in the market to tell them, okay, you can buy 20,000 dirhams worth of furniture. That's perfectly fine. And then install it for 4 months. But what if you skip the payment? What happens there? Okay, you pay interest, but what happens to your credit score? Here, nothing. In the UAE, nothing, because it's not well regulated yet, and it's not kind of also embedded into the credit system. So how do you educate the person on the other part that you should be wary of your entire budget, and how do you create a proper budget to manage all those kind of expenses? And I think those players should also play a part in the big umbrella of financial institutions to give a better education. So I really wish there's like an association or a syndicate for all wealth managers, banks in the UAE, where we can sit all together and say, listen, this is a plan that we need to do. This is an agenda that we need to push to the country. And another, I think, member of the syndicate should be the Ministry of Education, for example, and a couple of boards of schools. And I really wish this could happen.
Okay, so I'm gonna go a bit deeper in that question, because I think it's important for us to just explore this a bit. Let's forget the incumbents, right? Because if they've chosen not to do so, they've had decades, if not centuries, to do it. So obviously they haven't done it, and they choose not to do it for whatever reason it is, right? And again, I'm not gonna. Yeah. How many recognized sort of wealth tech platforms are there right now in the MENA market, just as an approximate number?
If you want to include all the trading apps that are coming from the West,
sure, let's include them.
Let's say 30 plus.
30 plus, right? Okay. Do you guys corral together?
So on a personal basis, so maybe StashAway and another fintech platform, yes. Actually,
no, but from an educational perspective,
yes. Okay. So this is what we do also with another prop tech company, where we go as part of this financial wellness program that I just talked to you about, where we go to companies and talk about those personal finances. We collaborate and talk about those specific topics. So that's what we do. But it's two companies coming together. But actually, we've never actually collaborated all together into one single syndicate or association and provided that. But that's a very good.
But I'm not giving you ideas here. The intention here is not.
But that's a great idea, right? So it's maybe something that we should do.
Because see, this conversations happen with a number of fintech, if I may say, segments, subsegments, whatever you want to call it. I've had a number of BNPL players who have sat out here, and we've talked about responsible lending, and the fact of the matter is, it's that old story around, is it a customer who gets himself into a debt, or it's a product which gets them into a debt or unnecessary debt, right? And that debate has been going on for as long as credit products have existed. But the question that I come back to saying is, then, are you guys as an industry, even as a subset of the industry, because you guys are if I keep using this term, the new kid on the block, you guys had that much more data, you guys obviously position yourself as more customer centric. Why aren't you guys all coming together and doing something educational? Let me take it a step further. I'm gonna make this a little bit more, if I may say, spicy here, right? If you look at purely trading platforms, right, where you buy a crypto coin this morning and by the end of the week, by the end of the day, it's double.
Yeah. Well.
Does education actually work against you?
Oh, we're talking crypto specifically?
No, I'm just talking about general investment. Anything which is short-term investment, right? Because see, the mantra has always been, stay invested. You can see the S&P over 20 years has outperformed every other asset class, or so on and so forth. Again, that's not me giving advice. That's me just sort of giving an illustrative example. But the success of a number of these online trading apps globally has been about the instant gratification, the instantaneity of being able to actually make a transaction, own a stock, sell it 20 minutes later and have made a 5% kicker on it, and then you analyze it and say, well, there you go, I'm a superstar investor, because if I analyze it over 365 days, I've got 1,500% returns or whatever else it is. Does education actually work against that?
So first of all, I really hope that those trading platforms do not offer like leveraging and
most of them do,
to non, let's say, savvy enough.
But how do you qualify?
I think this is really based on the due diligence that the platform should be doing.
Which is very basic.
Which is very basic.
So how do you do? So Arjun might, on the book of it, look like, he's over 40, he's got a job which makes him sound like he's smart, he's educated, arguably overeducated, but that does not mean I'm a wily investor, right? Because I might actually have a habit of betting on horses, right? I'm not saying I do, but I could, right? And that's not a question that you're going to be asking on my profile, right?
No, but the question that I'll be asking is, have you invested before? What is the time of investment that you've done? Or, for example, are you have you studied finance? Have you worked in the finance industry before? But again, as you mentioned, those questions are not going to give you a perfect indication that that person knows the effects of leveraging and shorting and so on and so forth. But also what I would like to say to the audience is that when it comes to trading, you should be treating it ideally as long-term investing. Buy your Tesla stock, buy your Amazon stock, dollar cost average into it if you believe in it, that's perfectly fine. But all the day trading that you do, the buying and selling within 5 minutes, or high speed trading, all these sort, that you can do that. That's not a problem. But I really hope that's a very small portion of your portfolio, like maybe 5 to 10%, because if you are investing the entire amount or your entire net worth into such a risky product, it's really damaging to you.
Just let me ask you the same question. Sorry to interrupt you. Do we have any numbers to tell me, and maybe I don't have any, so I'm asking a question, that what percentage of the customers who sit on these sort of new online trading platforms, right, which are global, are actually doing the sort of more daily trading kind of, or weekly trading, versus people who have invested and said, okay, I'm not moving for 6 months?
I don't have that number, but I have an interesting number that 80% of investors actually do not outperform the market, right, or the benchmark, right? So that gives you a clear indication that people are not smarter than the S&P 500. So do not reinvent the wheel. If you want to day trade because it's your hobby, or because you're able to find some kind of an interesting stocks to pick, that's perfectly fine.
The house always wins, right?
The house always wins, absolutely, right? So as long as you construct a well-diversified portfolio, and then on the side as a satellite portfolio, play around with that, that's also okay. But I highly encourage people to stick with the proper plan. Still, even if you want to pick a couple of stocks, pick them, but dollar cost average into them for the long run if you believe in them.
Okay, so where am I heading with all of this, right? I'm not heading into discussing about betting on horses. I can assure you that that's not where I'm going. I think where I'm heading with is in an environment where education is limited, right? Growing but limited, right? There isn't much of a, if I may say, a joint up effort towards solving the problem. So all of you guys are doing as much that you can do in your own little or big way, right? Doesn't cost of customer acquisition start sounding and looking like it's prohibitive?
As expensive, you mean?
Yes.
So definitely, as a digital platform, our only the only way to invest with us is through an application or a web app. The only way to get to a customer and to build trust, first of all, is obviously building trust. But how do you get that? Is getting by numbers of customers on the platform and trying the solution. And the first way to do that is by going to the online channels, the Googles, the Meta, the YouTube, and so on and so forth, and acquiring customers. And that's pretty expensive. Right, your CAC is gonna be super great. And at the moment, with some applications or software is limiting you to understand exactly what type of customer that you're trying to acquire by not tracking app or whatever, it's very difficult for you to pinpoint your target audience. So you literally get access to a mass market, but then that will increase your CAC and decrease your conversion rate, right? So what do you do there? The most important part to kind of reduce your CAC is to play a huge role on everything that's organic. Word of mouth is very essential. Referrals, very essential. All these kind of financial wellness program that you do, it's also very essential. And informing the customer that the company that you are investing in is secure. So is it regulated? Yes or no? By which regulated entity? So here in the UAE, we're regulated by the GFSA. There are a couple of other regulators that are in the region that are very, very good. What do you do with the client money? That's also a very important question. So we've seen recently in the beginning of the year some banks failing in the US because they mismanaged client assets. Last year, a crypto firm also mismanaged client asset and went bust. So how do you make sure that a client trusts you to manage their money? So that's a very essential part. And in the case of StashAway and most investment platforms in the GIFC, because we also all fall within the same category, we need to have a custodial structure, which means all the client money needs to be held in a custodian bank. And if the company ceases to exist at any point in time, the money is always there.
Yeah, as long as the custodian bank doesn't go down.
Okay, so our custodian bank is Citibank and HSBC, and they are part of the systematic kind of, so the banks that always need to be there, always need to be saved. So they are here. And if Citibank and HSBC are no longer here, I think we have a bit bigger problem on our hands. But yeah, so this is how you kind of build trust, and this is how you manage to increase your word of mouth, decrease your CAC, and eventually increase your conversion rate.
So again, I'm going to keep dwelling on this a little bit, right? So obviously, as you said, the trick is having a target addressable market. So it's not just a market, because you can imagine that, not everybody on any particular site. You also said correctly that it's not just about target addressable market, but you need to reduce your cost of customer acquisition, obviously conversion being a critical criteria, right? What sort of partnerships have you considered, and have you guys ever considered potentially embedding yourself into someone else's proposition, just to target those two criteria of target addressable market and CAC?
If I can get $1 for every single platform that reached out to us, an e-commerce platform or a wallet, to have a StashAway, kind of branded or even white labeled solution on their platform, I would be a millionaire by now, definitely.
But why have you refused?
It's not that we haven't refused.
Okay.
It's not that I'm also saying that we want to do it, right? So let's just get things clear. So two things. One, when we talk about the Middle East and Southeast Asia, I think there is a bit of a kind of delay or lag between the West and here, like by 5 or 6 years. So what's happening right now in the West, some of those applications are embedded within other apps, and that's great, and that's working. I think it needs a bit more time for us to kind of build on this education, for people getting a bit more comfortable investing while they have a bit of money on an e-commerce wallet, right? Our infrastructure or technology at the moment is not built in a way for me to integrate with anyone in particular, because it basically, we're an investment platform, we're not a tech provider. We've never turned down the conversation. Mm-hmm. I just think that on the other side, they need to kind of clear out or map out a proper strategy in order for them to roll out this solution. Start by embedded savings. So I think before you start investing, you need to save first, because otherwise there's nothing to invest in. And then from there, maybe take on the investment part. So as soon as we are maybe ready also to open up our APIs, we can do that, but also they should be also doing a lot of work on educating their audience on what could potentially come by creating those first features first.
Okay, no, so I agree with you. We're not going to get into the chicken and egg things, because when your friends when Twig were here, I think one of the questions I asked was with embedding, offering savings without a purpose of the savings sometimes doesn't fly either, right? So you got to give the hacks behind it, right? So you save to either invest, you save to spend, you save to protect, you save to insure, whatever, right? You save. So actually, it's a bit of a chicken and egg. Can you get away with having an embedded savings product which doesn't give you those outlets, right? But we're not going to solve the embedded savings issue. So one of the things I had heard, and tell me whether this makes sense or not, and if it, and obviously you guys have not done it, or maybe you are planning to, was a lot of people said that and I go back a couple of years in a conversation, was that a number of robo-advisory players, investment platforms, or long-term investment players were thinking on saying, why don't we actually extend our product offering to include online trading? Right, because there was a certain, I guess it's arguably relatively easier to onboard a customer with a very simple message which says, come and buy your Tesla stock here, right? Versus do some long-term savings and here's a bouquet of ETFs that you should invest and stay in for the next 5 years to do wealth generation, right? Now, I don't know how many of them acted on that and went ahead and then launched their own online trading platform. Is that something you guys consider? Because that is another way of driving your CAC down.
Yeah, we've looked into it, to be quite honest with you, and we decided to stay within the strategy of long-term investing toward, with pre-constructed portfolios diversified across multiple ETFs, and not, trading directly with stocks. You have the option on StashAway to kind of curate your own portfolio through flexible portfolios. If you don't want certain exposure to gold, decrease it, or maybe select one ETF. That's fine. You can do that. But we decided against the trading element of it because we are, or at least our target market that we're trying to address is the ones that are focused on building long-term wealth, maybe building wealth towards their retirement and so on. And by having a trading aspect to it, it might break a bit that vision or the target audience that we're trying to address. And at the end of the day, there are a lot of players out there that are doing this. So by us adding another trading app on the platform, it's not really gonna solve the entire kind of value proposition, right? So and we think that this particular topic of building long-term wealth in a very steady way with dollar cost averaging, and I have something that I like to say is that investing for the long run is as sexy as seeing paint dry, right? So it should take a long time, and this is what we want to focus on for the time being.
No, I can't tend to disagree with you, because I think when the idea or the concept was discussed with me, and again I come as a complete novice on the topic, my view was that I think the brand association with someone trying to position themselves as a long-term investment platform, versus someone who gives you instant gratification, is slightly different. Now, that does not mean that a customer cannot belong to both categories, right?
Absolutely.
Most of us are schizophrenic in any case, in a lot of things that we do in our lives. So I'm sure investment is still truly true. But I think if you want to if you want to build a long-term B2C brand, right, rather than becoming a SaaS platform, which is nothing wrong with it, but B2B offering, then I do think you need to think it through in terms of how do you position yourself in the market, right?
Absolutely.
Because that everything for everybody strategy sort of sometimes doesn't always sort of work, and definitely not when you're talking about people's life savings or considerable amount of what they're actually.
It becomes a supermarket.
Yeah, it does, right? And you lose the essence of actually giving the longevity of life. You actually become someone who's a broker, right? And that's again nothing wrong with being a broker, right? So let's talk a little bit about Middle East, right? You obviously mentioned that the challenges with MENA are quite unique. You've got copious amounts of different cultures, people who come with different sort of expectations, the way they trade. So what sets you guys apart?
It's a very interesting question. So the main value proposition of StashAway is how we build and construct our portfolio. Okay. So the investment strategy. It's a proprietary investment strategy called ERA, Economic Regime-Based Asset Allocation, which means that every time the market or the macro environment changes, we readapt our portfolios depending on that. So at the moment, we're in an environment called stagflation, which means inflation is super high, but growth is low. And as soon as inflation starts going down, and also the growth is still very low, we reach a stage called recession, right? And your asset allocation in the stagflation mode should not be ideally the same when you're moving into a recession mode or good times or maybe an inflationary mode. So it always should be adapting. So for example, if you're in good times, ideally you don't want to be 100% exposed to the bond market. You want to be exposed to maybe to the tech sector, small cap equities, more focused on the equity market and the US, particularly because it does very well in that particular time. If you go to the inflation mode, maybe a bit more exposure on the energy sector because it tends to do good within that kind of time period, or maybe inflationary linked bonds. So that's how we readapt our portfolio structure depending on the macro environment. And that's what sophisticated investors tend to invest or tend to come to StashAway for that specific purpose.
And how's your backend, if I may call it the backend, structured? So where is this expertise coming from?
We have a CIO office that sits in Singapore, that sits in Hong Kong, sorry. We have also a couple of team members sitting in Singapore also assisting the investment office. And they basically, through an algorithm that they created, select a universe of ETFs. And based out of the universe of ETF they create, then this is where they gather all the data that they have on those ETFs and on the macro environment. And this is where they see what ETF I can particularly assign to this environment and the risk level that the customer should have as part of the asset allocation. So everything is done out of Hong Kong. And this is where they do the asset allocation.
And I guess you translate that for every market slightly differently?
Not necessarily, no, because our portfolios are globally diversified across all geographies, more or less, and industry also diversified. So you won't find only a specific industry; you'll find all the industries, and obviously asset diversified. And yeah, so. Basically, our target audience in every single market is pretty much the same across all 5 countries. So that sophisticated investor looking for a diversified portfolio that is adapting to a macro environment. So
do you need to do anything differently in this market except the whole education piece, if you park that aside?
So when it comes to changing the portfolios and asset allocation, not necessarily, other than obviously the education, but we are very transparent with our customers. So we inform them every single time that we're optimizing. We send them an email and we communicate with them, and then we do a webinar also explaining the asset allocation. But we don't do it frequently, by the way. It's not like every single month we need to change it. It's whenever a market environment is suddenly changed. Sometimes it can take 5 years. In our times in the past 4 years, we changed market environment 3 times, for example, because it was a very uncertain time. So yeah, we keep things very transparent to our customers.
Okay, and are you at liberty to give me some indications in terms of how you guys have grown since its inception here in the region?
Yeah, so our growth was very, very good in the beginning of 2020, 2021. We grew in a very exponential way. We saw that there is a lot of appetite to the investment world, especially after COVID, right? So COVID was kind of a sparkle for people to say, okay, what am I doing with my money? Whether it's for investing or crypto, right? So it
or
also
horse betting.
Or horse betting. So a lot of people jumped on this kind of trend and started investing, and it was quite interesting. But then 2022 came. 2022 was a very bad year for all things investing, whether it's crypto or the stock market, or even the bond market. So everything reacted in a negative trend. And this is where we saw a lot of people not withdrawing, but taking a step back, not investing, keeping things quite simple, and just waiting for the market to rebound. Now, if you ask people at the end of 2022, what are your outlooks for 2023, they would tell you, oh, we're entering a recession. But funny enough, the S&P 500 went up by up to 20% and now went back down a bit to 16. But still, right, you cannot predict the market. But still, what we find is that the investor is still kind of wary, still not sure what's going to happen. So not really investing a lot into the stock market, however, shifted their attention to the cash product. Interest rates are very, very high at the moment. I think central bank or IBOR rate is at around 5.1%. And people are interested in that. So how we readapted this focus is by introducing StashAway Simple. So we had StashAway Simple since the beginning of our journey, but we increased the rate to 4.5%. It's essentially a money market fund where people invest ideally for their short-term goals or managing their cash. And at the moment, it's a quite good high yield. There are no minimums, no maximum. I'm not trying to sell the platform, but the money market fund is quite interesting also for people to consider as part of their short-term savings. And it's daily liquidity. So it's not like you're putting your money in a fixed deposit. You need to wait 6 to 12 months to get your money back. It's daily liquidity and no lockup period, essentially. So,
okay. And during that period, did you see a fluctuation in your AUM, or you've constantly grown your AUM?
So we've constantly grown our AUM. 2022 was some kind of a steady, steady mode.
Right.
People not withdrawing but not investing. Very wary of what's happening. But now we see a sharp uplift in especially the cash product. But again, some people are entering back the market slowly to start investing again.
Okay, so let's look a little bit into the future, right? So I've got a few questions out here. So there's always this age-old debate regarding financial products, whether something is a feature, is it a product, is it a category by itself, right? And again, this is not a leading question. I just want to be very transparent with you. So a number of people have come, sat here, and we've had this conversation. And some people have said, I don't think BNPL is a category by itself. At best, it's a feature or a product, which needs to be sort of embedded in a much wider proposition. So, either BNPL players will become online marketplaces and BNPL will be something that they offer, or basically BNPL will go embed itself into a banking offering and it'll sit aside normal lending products. Yeah. Where do you see B2C wealth platforms, especially robo platforms, head? Do you see these as standalone businesses that will remain as categories and flourish, or do you see a future where eventually, banks or bigger wealth managers, or more like traditional wealth managers,
dinosaurs, I call them.
Huh?
I call them dinosaurs.
Dinosaurs, all right. So the only reason I don't want to call them dinosaurs is because, dinosaurs went extinct. And one of the things about banks is that, while everybody keeps telling everybody that, they are things of the past, they turn out bumper profits always, year after year. They're still, the regulators trust them more than anybody else. Customers also deep down sort of feel more comfortable at the end of the day. You mentioned Citibank and HSBC. You said, if they went down, there was a bigger problem. So that's the whole point I'm trying to make here. So where do you see this industry that you are part of? And I'm putting you in an awkward place here. From the next sort of 5-10 years, is this going to be a business by itself, a category by itself, or do you think eventually these will get all consolidated in?
So I would just take a step back a bit and define what is a fintech, right? So a fintech is a financial institution that is using technology to basically meet a gap in the market.
Yep.
And what is the gap? Or what is the biggest financial institution in the world? It's a bank. So basically finding a gap that the bank is not offering and basically building that solution on the side. So that's where every single wealth tech or fintech was created, because there is a gap in the bank. Now, whether fintechs are able to adapt or penetrate directly a bank or being embedded into them, we've seen it happening multiple times, right? A lot of banks have acquired other fintechs. We've talked about Nutmeg in the beginning, being acquired by JP Morgan, and also in the US also a couple of robo advisors were acquired, or maybe they went their own kind of way. They IPO'd, they got their own exit, and that's perfect. In the region specifically, again talking about that lag, I still feel like there is a bit of work to be done on educating the people on the comfort of investing before turning the page and saying, okay, here you go, embed it into your banking application. And plus, as a fintech, I feel like you can scale way faster being on a standalone at the moment than being embedded in such a large corporation with a lot of decision makings, corporates and so on and so forth. And banks have tried here in the region. Banks have tried to launch their own kind of wealth tech platform. You tell me.
No, well, I can't unfortunately tell you because, as I said in the beginning, it's not something that So I'll be very honest with you. I use an international online trading platform, right? I am long term because I'm forgetful. I'm not long term because it's deliberate, right? My view is I went and the funny thing is every stock that I've ever bought which I've done well is not because I ever thought about doing well. It's just that I forgot I'd invested in it, right? And whether that's Apple or whether that's
I hope you invested in Tesla or Nvidia and you forgot about them.
I did Nvidia. I never invested in Tesla for no reason at all, but I just never did. But Nvidia I did. And because, to be honest with you, I actually like companies which, and the analogy which I saw an incredibly cool sort of graphic was that, everybody was talking about the gold rush, right, of AI, and Nvidia is the one selling the spades. Right, and I like companies that sell spades.
Yeah.
I'm even on fintech, right? And again, by no means is this to be taken in the wrong way. I love infrastructure players, right? Because I always believe that when you're trying to do something which is systemically different to what things are being done today, you need to have good foundations.
I agree.
And people who can deliver those foundations are going to be around for longer, right? The front layer is going to be a bit like, with all due respect, a bit more dog, right? It's going to be a lot more competitive and what's going to go on. But let me put this question back, right? So the conundrum in my head is that, you're in a market, let's call it GCC, right? Where it's not very big in terms of number of people, right? There must be, yes, there's tremendous potential asset under management because I guess we're economically well off compared to the rest of the world, right? But then that comes with, a few people having loads and loads of money. A number of them are international people, and will they actually start using platforms from here? God only knows. I'm not hearing a question. So you have a target addressable market, which both because of either just the pure size or the level of education is not big enough yet. And it's going to take time for it to grow because it's a concept. Wealth management is arguably a lot more complex than just a simple savings product or let's be honest, a BNPL product. Something you don't have to be a rocket scientist to figure that out, right? CAC is high, especially in a B2C business. Because education levels are low, and just B2C is incredibly hard. Yes, you can keep throwing a lot of money, and we have enough neobanks, digital banks across the world. I don't know, there's like 400 of them and maybe 5% of them are profitable. So obviously the others are all unprofitable by that definition. And then you have this challenge that how do I build long-term value, so the LTV. And if I just simplify those into those three metrics of a business, right? How do I create long-term value, CAC, and address the TAM, and then put the profit question, it just feels really hard.
It is. It is definitely very hard. I actually don't have an answer to your question.
No, but my question here is that what keeps you guys going every day? Because, is it so hard that it warrants a pivot in some markets? Or is it just that, your logic is stick to it and the weaker players will fall aside? Or consolidation will come and we'll be the consolidator? Because I'm not suggesting just because it's hard you can't win.
Yeah. So, okay. I mean, speaking facts, we already manage over $1 billion in AUM.
Yeah.
We have more than hundreds of thousands of clients using the platform, which clearly means it's working.
Yeah.
There is a need for it, right? Mm-hmm. Now, how do you keep on growing? It's I think the exact same way that we've been doing it in the past, and that's the word of mouth, and kind of keep on pushing and pushing. And we are funded hopefully through profitability. So we're on the right path to reach there. And I think the business model that we have is that it has quite a good margin to be profitable as soon as you see the numbers coming in and the people coming in. Now, going back to the topic of inserting it in a banking kind of system.
It doesn't have to be banking. Any other
institution.
embedder, right?
It feels like especially here in the region, and you've talked a lot about, there's a lot of wealth in the region, and specifically banks have a lot of money. They could have done it a long time ago.
Yeah, but banks haven't done a lot. See, I'll give you an example. Sorry, Joseph. BNPL, right? Everybody talks about BNPL. BNPL has been around for centuries, right? It wasn't called BNPL. It was not digital, right? So it's a very old concept refashioned for the new, right? Banks actually used to have credit cards, right? And at one time they were giving credit cards quite freely and quite easily out here, right? Because there was no credit bureau. They would, the checks were very basic. And then banks had EPP, which is called an equated monthly installment, which allowed you to break. So everything existed. They just chose not to do BNPL. So I wouldn't use banks as a reference point. Banks don't love too much change. That's kind of the bottom line, right?
And this type of business does not bring a lot of money to the bank either. Let's agree to that.
Yeah, but I think fee-based incomes are good for banks to actually, because, as you said very correctly, interest-based incomes can be seasonal, right? You could have good times and not so good times. And then you obviously have the worry of, non-performing loans and so on and so forth, right? So high interest rate environments can both be a bane and a boom, right? So yes, you're collecting a lot more interest rates, but arguably, it can lead to some of the challenges. I come back to your business. Isn't it slicker to do partnerships in terms of being able to address some of those CACs, whether that's a telco or a retailer? Isn't that the way forward? Maybe I'm just putting you in a corner. No, apologies, but
to be honest, I don't know what's going to happen next. It might be the way forward. Every single company at the end of the day are built in a way to serve the market a little bit better. And if we find that our kind of service has been saturated at one point, then definitely we'll be partnering up with someone else, and then potentially cross-sell our solution with their users. That's for sure. But for now, it's definitely working. I don't see particularly StashAway partnering up with a bank or a telco company in the next couple of years, because I think we're doing an incredible job at exactly the business proposition that we're offering. But I can never say no to such solution. And I think the biggest kind of question is, how do you reduce that CAC? And this is exactly it, right? So partnering up with the telcos, even the banks, and maybe other big players in the market can potentially bring you that, because you're already penetrating their customer base, so it's already there. And I can see a lot of telcos already going out there and acquiring other non-financial institution and also financial institution to build that kind of super app. We're seeing it here in the Middle East, but there are also kind of other applications that such as AstraTech, for example, building their own super app, and that's cool to see. Potentially they might think of also looking
Abdullah was here actually.
And potentially looking at on the wealth tech front, and that's not a bad idea, because they already have, I think, more than how much, like 200 million users.
Well, he said about 150 is what he said, but I'm not. You don't quote me, right?
That's already amazing, right? And cross-selling there and educating people on those kind of platforms becomes easier, right?
Because that's what I think. At least that's my working assumption. But proof is in eating the pudding, as I always say. Okay, let's get to a more sort of StashAway relevant question. So, what is coming down the line in terms of new features, new products, new services from you guys? So I've talked about the 3 suites. So we have the cash suite, the general investing suite, and the kind of StashAway Reserve, the private market suite. So the private market StashAway Reserve is only in Singapore. So it's something that I'm very interested in bringing here to the region. And I've already had a lot of conversations with high net wealth individuals and family offices. And it is definitely a solution that they're, looking into, and specifically with the influx of high net wealth individuals coming into the region, that will be a very interesting solution. Maybe let me tell you a bit more about the solution. So it's essentially us giving access to only accredited investors, some allocations into the private equity funds and venture capital funds, but also into angel investing. So essentially, we get the allocations ourselves. StashAway, we're the only customers in the eyes of the private, the PE fund,
let's say we get like an access of $2 million, and then I go back to my customer and say, okay, do you want to have an access to this fund? Minimum is a commitment per year of $50,000. That's how it works, right? So this way you're reducing the price point. So instead of all of a sudden putting a minimum ticket size of $500,000, you reduce it by 10 times, and now you have an entry point of $50,000. You have a diversified exposure to multiple private equity market, and obviously you're diversifying your asset class in general. So that's what we're trying to build here also in the region. We've already had a couple of conversations, and it's something that could be potentially quite interesting to offer only for accredited investors, because it's such an illiquid product. You never know, it can be locked in there for 10 years. Who knows, right? And it's something that only I think accredited investors can have access for at the moment because of that financial education aspect that we're talking about. But they also still need a bit of financial education on that specific topic. So we also are in the, we also build a lot of webinars around that. So that's what I want to introduce. Another thing is that we have in Singapore that we could potentially bring here is, so we have Simple, which is for cash management, and it's a money market fund. Another feature in Singapore is Simple Guaranteed. So instead of investing it in a money market fund, I'll give you access to a fixed deposit rate, and I'm guaranteeing you the rate for 6 months, 12 months, and that's a reaction to what's happening in the market right now, right? So that's quite an interesting value proposition for
definitely
right now.
Because I think your interest rates and banks fixed deposits is negligible.
Exactly, right. So this is something that we can potentially look at, and a feature that we're actually launching on Monday, which I'm very excited about, is recurring deposits, and we partner up with Lean Technologies to offer this feature. So at the moment, every single platform probably is already connected through Lean, and what you do is a one-time deposit where you send your funds directly from your bank account to your investment platform. What we built the technology on top of that is enabling clients to select recurring deposit depending on the frequency which they prefer, monthly, weekly, bi-weekly, whatever they want, quarterly, and they can invest that. And that's the beauty of investing, which is the dollar cost averaging, the systematic, the disciplined way of managing your finance. And some people might argue, okay, but you can create a standing instruction from the bank. You don't really need that solution. Or, you can just, link your credit card and then you can have auto deposit. A couple of things here. So one, with the credit card, you're obviously paying the fees, and it's quite expensive. So if you're trading, that's a bit different because you are expected to have that quick gratitude, so you can recover those 2% fees. But when it comes to robo-advisor or long-term investing, it takes a bit of time to recover this 2%, right? So that's why we don't have credit cards on our platform. Another point for the standing instruction, and that's a personal story. I don't really advise a lot of people to create standing instructions to send money to investment platforms, because I've created one back in 2020 when StashAway first launched here, and I obviously launched the company here with them, but I'm also a customer, and I was applying also for a car loan from a particular bank, and I got a call from the credit officer, and they told me that my car loan was denied because I had a standing instruction worth X amount going every month to StashAway. They thought it was a liability because I did not meet their criteria or their enough salary, kind of a minimum income per month to have access to the car that I wanted, and I got my car denied. Although the standing instruction is going towards an investment platform, so those are still assets. I'm not paying anyone, and I got my car loan denied. So that also gives you a question, or brings the questions like, what are banks doing when it comes to open banking and open finance and so on? So what is exactly their role into that mix? And by building this solution, I'm removing the standing instruction. I'm just literally creating an automated way of creating a transaction, and the customer just needs to approve it on a monthly or the frequency basis that they've selected. And that's quite exciting. Brings the the discipline and again the systematic way of managing your finances and eventual building the long-term goal.
Fair enough. So there's a few things that you're going to be busy with.
Yeah.
I'm conscious of the time. Last question for you. right? Obviously, you are regulated at the DFSA, but you're an online platform that allows you to actually trade across the region from a non-solicitation perspective. So I understand what that means, and for people who don't, it basically means that you can actually onboard a customer from, let's say, Oman or
Qatar,
Saudi.
Yeah.
They can actually fund the platform, they can receive the money. The only thing is that you're not allowed to be in these local markets pushing marketing
exactly,
and so on and so forth, right?
Yeah.
So with that, but what is your plan for expansion in the region as such? Is it just to continue doing what you're doing and then hyperscaling it from the UAE, or are you going through a process of actually setting up shops? Well, you don't set up shops, but you get the point.
I don't have a timeline particularly. But obviously, being in the region, we need to look at the other countries that are surrounding the UAE. UAE is a very, very exciting market, and that's why we've selected to start our operations here. I think we're yet to reach a point where I say I've made it in the UAE. We're still quite small compared to Singapore or Malaysia when it comes to the global numbers. So we need to kind of focus, double down here on our effort and strategy, and then next, big player, Saudi Arabia, right? So this is it's the elephant in the room at the end of the day in our age, and it's definitely a market we're very interested in. I don't have a timeline for you to go on and set up shop there, but it's on the radar for sure.
It's on the radar. Joseph, thanks for coming in.
Thanks, Arjun.
Right. I hope it was, I learned a few new things. I'm confident that some of the listeners would have learned a few things. I guess long-term investments is the way forward.
Yes.
Not that I'm giving any financial advice, just to be on the clear. But thank you for coming in.
Thanks, Arjun. Right. Couch is super comfortable, and looking forward to coming again.
Okay, well, you're welcome. It's usually the room is very cold, but today I think we got that one right too. So everybody, that was Joseph El Am. He is the general manager with StashAway for the MENA region. As I said, I hope you guys took a few things away in terms of investment platforms, robo-advisory. Go give it a shot. I think it's StashAway. I don't know if it's .com or .ae, but I'll leave that for you to figure it out. With that, goodbye, and I'll see you next week.